remember 2023 for?
I think what's been interesting about 2023 was the recession never happened.
Yeah.
Right at the start of the year, we were, was it going to be first half, was it going to be second half? Hasn't arrived.
Yeah.
So from that point of view, it's been quite a benign environment actually. Yes, some markets come under a bit of pressure here and there, but generally markets have gone up. Obviously, particularly the mega caps have gone completely crazy. Bond valuations, which had been backing up, are beginning to come down now. So effectively, it's kind of felt like we just escaped a really nasty beating.
I think everyone came into 2023 expecting markets to be weaker, but actually they were perhaps not as weak as everyone thought. Certainly as asset managers, we expected markets to be weaker, but clients to still want to invest. And what's actually happened is that markets have been stronger, but with interest rates so elevated, clients have just had this aversion towards risk assets.
I think 23 has been a really interesting year, and investors have really been focused on their core portfolio allocation. So pluses and minuses, but lots of opportunities still out there.
2023 is about to wrap up. So what are your thoughts on this year? Like, what are your big takeaways?
So I'm in the pensions industry. The big takeaway is the upending of pension asset allocation, the rise of Clara as a super fund, and the changing dynamics into 2024 for our entire market and what the government and our members expect of us.
So in terms of markets as a whole, it's been a tough year with a lot of volatility, but it looks like interest rates have peaked and inflation probably is on the way down, and therefore we're going to see a downward trend for interest rates. That is good for markets.
I think most people would say it's been a pretty challenging year. It's been lots of volatility. But two things, I think that volatility it always creates some opportunity in the investment world, as long as you're on the right side of the prevailing themes. And I would also say from our personal perspective that we've seen that the kinds of people that we back, some of the really experienced top-tier private equity managers have really demonstrated a resilience and an ability to be able to rise to the challenge.
As we look ahead to 2024, what's one thing you're keeping an eye on?
2024 is the year of duration. People are going to want interest rate risk. They're actually also going to want all types of fixed income because we finally have a yield worth having.
So 2024 is another year of innovation for the pensions market, both in terms of new solutions, new investment ideas, and the idea that pension funds can do more than just secure benefits, that they can enhance benefits.
2024 is going to be really interesting. Economically, it's going to be interesting because we're going to see a decline in interest rates, and that makes it an interesting time for markets. There are questions economically that you have to ask, which is always exciting. How far can China remain so undervalued versus the rest of the world? Do we see a comeback of that? In terms of ESG, it's exciting because there is now an acceptance that one part of the ESG, which is carbon, we know the direction of travel. Now we've got to work on two other bits. Key is just transition. You cannot have the directionality without just transition. That's what I talked about when I was in COP. And then the second part is biodiversity, which we talked about in the COP in Glasgow, which I think has become a mainstream, as some of the panels here are talking about.
I probably am a natural optimist, albeit one that tries to ground that, looking at what's going on and what the data is. So I think we're probably going to have another challenging year in 2024. But again, I think it's all about capturing some of the inherent opportunities you get when that change comes along. And again, I think, when looking at our portfolio, I think we are backing managers that are, very on top of a lot of these prevailing kind of mega trends, and I think are in a great position to be able to capitalize on them.
Ultimately, we have increased interest rates. There's going to be a sort of lagging effect of that. So whilst we may get interest rate cuts next year, I think actually we're going to find economic downturn comes. Particularly, you're going to see more profit warnings, companies get into financial difficulties, some of the zombie companies going bust. Yeah. I think it's going to be a pretty uncomfortable world. But most particularly, I think what we will see is capital-intensive businesses start to do better. So already the FTSE 100 has already been pretty much the best performing stock market since September 2020. Outperformed by the US just recently, but generally it's right there. But most particularly, I think you'll see smallness. Smallness has completely missed the boat up to now. And the great advantage of small companies isn't just they can grow, but often they can grow when there's a recession on. They can acquire assets from the receiver. So I think we're going to see quite a lot of rotation, quite a lot of individual coming through, quite a few companies profit warning. It's going to be a volatile year.
Next year, bear, bullish, what is it going to be like, in your industry? Can you let us know?
So I'm a long-term investor, so bear and bull in terms of 1 year isn't something that we do, but I can see a lot of volatility next year. The key market for pension funds is the UK gilt market. I foresee a huge amount of volatility because versus, on one hand, you have lower inflation and the potential for lower rates. On the other hand, you have £250 billion worth of gilts that are going to hit the market, that is going to create enormous volatility for the industry.
I've been working in private equity for the last 15 years, and I've learned not to over-predict. I think it's all about being able to, having a portfolio construction and portfolio management that's resilient to whatever the year may throw at us. I am hopeful on the margin that we see a bit of a recovery in activity, and the markets, the global M&A markets, begin to resume a bit more normalcy. But that all being said, we always hope for the best, but prepare for the worst.
The great advantage of the UK market particularly is it hasn't gone up in any meaningful way for about 30 years. And so from that point of view, we had a panel just now where people, some of the sort of strategic analysts said, actually, quite honestly, I can't see any reason to buy the UK. I think the market is going to be wonderful. It's just going to prove them, not all of them, but many of them wrong. Specifically, I think the UK will continue to be one of the best performing stock markets. I think it will continue for the next 10 or 20 years. But most particularly, whereas previously it's been held back a little bit by smallness, I think that small cap sector will be one of the best performing parts of one of the best performing markets in the world.
I think the opportunities in private markets, nature, particularly interesting. So that's what we're going to focus on. That's what we hear from clients.
Look, it's about where we're positioned now, where markets are positioned now. So people have been risk averse. They've been focused on low risk assets. And so any kind of valuation uplift, yield uplift, growth uplift has been unattractive given the high amount of yields available on depository government bonds. I think that delta changes next year. I don't think it's necessarily straightforward. I think there's still downside risks. So I'm a tempered bull for most asset classes I look into 2024.